Hello everybody, Derek Vandelander here. What I'm going to be going over today is the Angel Trader strategy trading with the trend. This is video 1 of a 3-part series. Let's get started. First of all, I want to welcome you all to the Angel Trade trend trading strategy. In this course, I will be teaching you how to trade with the trend using a very detailed system. We'll be learning about hidden divergence, about divergent shark fins with the trend. We'll be learning about specific stop losses, risk to rewards, and take profit regions. This system absolutely goes perfectly with the Angel Trader strategy and may actually teach you more about shark fins and divergent entries. Let's get started here. Patterns. Have you ever noticed what occurs in the market over and over again? When we get these huge trend moves happen, we seem to always get the higher highs and the lower lows. Now, with this strategy, we have precise indications when we should actually be trading these trending markets with little to no drawdown. This is something that I've noticed over and over in the markets. I've seen these patterns play and doing the same thing over and over again. I've searched for over 2 years to find a strategy to trade with the trend, to only realize that it was right before my very eyes. Now I'm going to show you a staple of the trend trading strategy, which is also known as hidden divergence. Hidden divergence. Now this isn't your typical divergence that we've been learning about in the previous Angel Traders strategy. You may notice when we're trading hidden divergence, it's the complete opposite of a normal divergence that we have learned. What is hidden divergence? Hidden divergence happens when the price is making a higher low, but the oscillator in our case, which is the RSI, is showing a lower low. So, in a bearish trend right here, we have, a bullish market, we have a higher high right here. On our RSI is showing us a lower low. This is going to be our entry right here. Now in a bearish market, we have a lower high. Our RSI is showing us a higher high. Divergent shark fin with the trend. When trading a divergent shark fin with the trend, there's absolutely needs to have hidden divergence presence. We'll be taking our entries off the 8MA, which is the 8 moving average, the sentiment line, or the 50 moving average. This will depend on what our indications are telling us. Let's go over what we'll be looking for with this move on the next slide so you can get a visual of the pattern we will see. This is one of our golden setups that you'll see every day on any time frame. We have our lower low right here. Our RSI is showing us a higher high. What we're going to be doing is taking our trade off the 50 moving average in this case. We'll go over this trade in the next slide. So as you can see here, we have our entry point. What we'd like to see is we like to see our Bollinger Bands and our sentiment line right here pointing in the direction of the trade that we're taking. So in this case, comes down, lower high, higher high. We take the entry off of the 50 moving average. Now this is what this trade is going to look like. So obviously our entry is this red line right here. Our stop loss is going to be the previous high right here. In this case, I'm going to use the wick. Now our take profit is going to be the previous low. Now if you want, what we can do is when this trade comes down to your take profit, we can set our take profit so that it's a risk-free trade. Sometimes these trades are, when the breakouts happen, they can go for 200, 300 pips. So we'll check this out later in the video series though. Alright, what are the rules on trading a divergent shark fin with the trend? The stop loss when trading a divergent shark fin with the trend will be the previous high. The take profit will be the previous low. If you would like, you can use a trail stop and keep riding the trade. These moves often move into the breakout. The sentiment line and the Bollinger Band should be headed in the direction in which you are trading. Our goal is to take the trades with the best risk to reward ratio. These moves will typically come up to the 50 moving average or the 8 moving average, or in between the 8 and 50 moving average, and then reverse. So be patient and go with what the trend is doing. Let's go over another setup. Alright, so right here we have the bullish hidden divergence. It's going to come off the 50 moving average. Now as you can see right here, we have a higher low right here and a lower low on our RSI. Just touch the Bollinger Band. Bands are wide. In this case, if the bands were narrow, it would give us a shark fin. We take it off this, right off the blue 50 moving average, put our stop loss to the previous low. We'll check it out on the next slide. Entry off the 50 MA. I'm going to put my stop loss at the previous low right here. And then I'm going to put my take profit at this wick right up here. Now as you can see, it came up quite a bit further. So this is, if you wanted, you can use a trail stop and just ride the trade out. These trades don't always come off the 50 moving average like explained earlier. Oftentimes these trades will reverse at the sentiment line as well as right around the 50 moving average. Generally these trades occur when the shark fin happens, so if the shark fin is formed right above the 8 MA, 8 moving average, then I'll take the trade off the 8 moving average. Same rules apply if the shark fin occurs at the sentiment line. Generally, the steeper the Bollinger Bands and the sentiment line and the 8 moving average is what's going to be closer, it's going to reverse off. So if we have steep Bollinger Bands, meaning indication of strong trend, it's not going to normally come out to the 50 moving average. It will normally come off the sentiment line or right in between the 8 moving average and the sentiment line. Remember though, when taking these trades, our goal is to have the best risk to reward ratio. So let's go over a live setup. Alright, so what I'm looking for right now is hidden divergence. Alright, so what I'm looking for right now is hidden divergence. It's coming up. We don't quite have a nice shark fin yet. We want to see a little bit of distance between our RSI and our Bollinger Band in this case. Now, if our Bollinger Band was a little bit wider, this would be fine. What I'm going to do is I'm going to wait to take the trade off the 50 moving average, which is our blue line right here. So I'm going to go up a couple candles. 1, 2. So now I'm going to do a sell. What I'll do is I'll put my stop loss to the previous candle close high right here, and which is a 3 pip stop loss. And this is the 5 minute, not a very volatile market. And then we're going to go forward a couple candles. Came directly off where I took the sell. Keeps coming, keeps coming. Now I'm going to put my take profit to right at the close right here. That's where my take profit would be. So just going to keep coming. And you Okay, so what I'm going to be going over now is a bullish hidden divergence move with a shark fin. So what I'm going to wait for is I'm obviously going to wait for the hidden divergence to appear. Now in strong moves like this, they're often not going to come down to the 50 moving average. What this one's going to be doing is coming down to around the sentiment line, and then it's going to reverse. Now with this one, you're not going to have as great of a risk to reward ratio, but I'm also feeling as this one you can hold your trade longer due to how strong the actual trending move is. So let's go over right now what we're going to do in this instance. Okay, so we're gonna keep going. So in this previous bar right here, I'm just gonna do a buy. It's in between the 8 moving average. We have a shark fin that's pretty apparent. So I'm gonna do a buy right here. We'll get this buy. And obviously what you want to do is you're going to want to put your stop loss right here. It's 19 pip stop loss. But it's also, if you want, you can put your take profit up a lot further, especially when you're looking at the higher time frames. It's a clear bullish move. So let's go a few more ticks. And so you could put your take profit to right here and it would have immediately hit. And then what you'd want to do is you'd want to put a trending or trail stop. So you can put your trail stop just so you're in profit. And now we're just going to keep going, see what this market actually does. And see right there, clear bullish market. Just moves right up there, 45 pips, you'd still be in profit. So that is a trade that I've been catching a lot lately, and as well as the same bearish moves. How to identify the previous high or low. When identifying the previous divergent high or low, the market has to have significant retracement. I'll show you samples of the actual hidden divergent retracements. I'll also show you an example of moves that are not considered a retracement. Once you start to recognize these patterns, the easier life is going to get. Let's go over a few of these moves that aren't considered enough retracement. As you can see here, the market didn't move much back into the market. That's not enough retracement for me to count this as another previous low. Here's another one. This is not the previous low retracement right here. This is not a retracement. So if you're trying to count this off the 50 moving average to be divergence, that's incorrect. Or the hidden divergent, that is incorrect. This is going to be the previous low, this shark fin right here, so that would make this setup invalid. This is not hidden divergence. And as you notice, the trade would have hit your stop loss. Again, this is not a retracement. This is showing currently hidden divergence, but this is not a retracement because it didn't come back enough into the market. This right here is the previous low, which would give us a tacky trade. We don't want to take that. Let's go over how we would set up our trades. When trading hidden divergence, we want there to be a good risk to reward ratio. If there isn't a good risk to reward ratio, we can create one. Once you start to realize that our risk to reward plays a huge factor, you will notice you can win 6 out of 10 trades with a 1-to-1 risk to reward ratio and still come out profitable. The good thing that with this strategy, our risk to reward will often be 3-to-1, and that even if you win 4 out of 10 trades, you will still be profitable. The good thing about the strategy is oftentimes you'll find yourself winning 8, 9, or even 10 out of 10 of your trades. In this next slide, I'll show you how you will set up the stop loss differently if there's not a previous high. So as you notice here, if I were to take this trade, it's giving us a clear hidden divergence, but there's no real identified previous low. So what I'm going to do is I'm going to take the retracement, it's a very small retracement, and I'm going to put my stop loss right here to give us a good risk to reward ratio. Now I'm going to take my entry obviously off the 50 moving average and put my take profit right at the top of this wick. Again right here, our entry is going to be off the 50 moving average. There's no real retracement in here, but it's showing us that it's hidden divergence. I'm going to place my stop loss right up here in this small retracement. I'm going to do my take profit right here. So we have about a 1 to 5 or 1 to 4 risk to reward ratio right there. Again, no real great trade right here for risk to reward wise. What the reason is because if we were to put our stop loss right here, it wouldn't give us much room to move. So if we do have a setup like this where it's very close to our previous low, what I want you to do is give yourself a little room so it doesn't, the market doesn't give you a stop hunt and hit your stop loss. Again, entry off the 50 moving average, stop loss, give yourself a 1 to 3 or 4 ratio. And then your take profit is obviously the previous high. Let's go over how we would set up our stop loss to the previous high. With these trades, you can place your stop loss in the previous high because the risk to reward ratio is at least 1 to 1. Anything that is not 1 to 1, I will normally move my stop loss to the previous small retracement. These next few slides, you will see that the stop loss is set to the previous high. So as you can see, this is our entry right up here. I wouldn't have taken this trade until up here because it hadn't given us any form of shark fin yet. So I'll take my entry up here. It's giving us hidden divergence. I'll put my stop loss at the previous high wick. Take profit, obviously, at the previous low. Again, entry right here. It has a nice shark fin. We have great hidden divergence. Put our stop loss right here. You got to give yourself a little bit of room. And what you're going to do is you're taking your profit right here. You're just going to let it ride. Also, you have to see right here, here's another entry, another hidden divergence. Just threw that in there for you guys. Again, okay, so right here, say we have our entry off the 50 moving average. Well, obviously, as you can see, it came up a little further. Our previous high is right here, so this is at least a 1 to 1. This is at least a 1 to 1 ratio. Let's go over one more. Entry off the 50 moving average. The stop loss, previous high. Take profits, previous low. Very, very simple stuff. Again, entry off the 50 moving average. Hidden divergence is present. Stop loss is the previous high. You have to give yourself enough to have at least 1 to 1 risk to reward. And in this case, if you put your trail stop on there, this trade just kept riding. Great trade. Now, we've only touched the basics of the trend trading strategy. What I want you to do now is find 5 of these moves on the previous history on any time frame and mark the chart up with your entry, exit, and stop loss. If you'd like to send me the screenshots, feel free and I'll give you feedback. Congrats guys, you have now completed the first video to the trend trading strategy. In the next video, we're going to learn how to read the market based on the higher time frames to give us an even better example if the market is going to be bullish or bearish. I hope you guys are as excited as I am.